Hi, this is Zach here with the bulletin board here at Zach's Traders Cafe for Monday, the 12th of February. Starting off with the FTSE 100, which is still dithering, but has bounced off that 200-day moving average, which is some relief, but we still need to see an end-of-day close above that rising 50-day moving average at 7,600. That should hopefully then take us back to the 7,700 area. On the downside, an end-of-day close back below the 200-day line at 7,550 could take us down towards the floor of that rising August trend channel as low as 74.40. The negative bias is provided by the way that we are actually below RSI 50, so 47 or 46 at the moment, in fact, and so therefore in mid-range, but not really having a proper driver at the moment. Moving along to the DAX, which has been trading either side of the 17,000 level for quite some time, a couple of weeks now, and we're looking for that proper clearance of 17,000 to give us a move towards 17,900 at the top of that rising October trend channel as soon as the end of next month. On the downside, that's likely limited to the 50-day line and the floor of the channel at 16,700. RSI at 60, so in a good place in terms of this being a staging post for a new leg to the upside. Moving along to the Dow, which has all the excitement in the near term. Here we've got the market making another consolidation, this time at and above 38,500. We've got that very steep Octoberizing trend channel providing support near that level, and ideally we stay above that, looking for 40,000 in the top of the October channel by the end of next month. On the downside, if we break down and that channel is very steep, then the risk is of a move to 37,400 and the 50-day moving average, and that ties in, I suppose, with the December-January support zone. Market of the day must be the state of Bitcoin at the moment, or it was at least over the weekend. Here we shied away from breaking 49,000 and the old January peak, but still plenty of momentum here in terms of that rising 50-day line, and ideally the market will make a beeline for the top of the rising trend channel from August as high as 52,000 by the end of next month. In terms of the downside, hoping that we won't get anything lower than the mid-40s zone, 46,000, that initial January peak, for instance. Maybe that will support the market if we do pull back a bit more. On to gold, and here you can see that we've got the market as again dithering a bit like the FTSE, either side of the 50-day moving average, in this case 2043. Below that, still, I suppose, given the way that the price action is, and with the RSI below 50, there is the risk of a final, hopefully a final test of the floor of that rising trend channel from back in March around 1990 now. On the upside, the best, I suppose, at the moment is 2100 by the end of this month. Moving on to the stocks, and it's quite a large selection today, which maybe is a sign of a bull market. Who knows? First one is Artemis, where we certainly heard it here first in terms of the turnaround. We had a bear trap island reversal, one of the strongest and one of the most reliable signals that you can have. So gapping down back in January and then gapping up to start this month, rising 50 and 200-day lines as well. So that means we're in the run-up to a golden cross. It's typically the strongest part of the cycle. And the top of that broadening triangle from back in August, heading for 2.35 pence, which hopefully we'll get well before the end of this month. We could project it a bit higher, or we could have another target, but maybe just go for 2.35 initially here. Ideally, be close above 1.75 pence today to give us that platform for 2.35 later in the week or in the month. On to Angle, which I know has its fans, very loyal fans, obviously, given the ride they've had in the recent past, but we've had a failed gap reversal, so failed gap rebound. In fact, the gap floor there back in January around the 14 pence level and the low just above it, and bouncing off the 200-day moving average. Rising 50-day moving average as well suggests that the old target that we had there, 25 pence, is the initial place for this to go, and then maybe by the end of next month, if we're really lucky, up to 35 pence to retest that January resistance. But while we're on the right side of the 50-day line and above the gap floor there at 14.25, looking rather healthy, especially given the way the RSI is now pushed above neutral 50 to stand at 57. A stock which I haven't looked at for quite a while, and I think I'm the only person who actually looks at it, is Conroy. And here we've had an unfilled gap to the upside, resuming the December rally for the shares Above that peak at 26 pence, looking for the top of that triangle from back in June, as high as 31 pence. We might even hit that by the end of this month. Ideally, we stay on the right side of that 200-day line at 22 pence. I think I covered Celadon yesterday, and here the shares finally breaking through that resistance line there from May last year. I did suggest that February, March, or at least March, April could be a good time for these shares, and it looks like we're going in early on that idea. We've got a rising 50-day line as well. The initial target here, £1.27, which was December resistance. Big picture target, maybe as soon as the end of next month, as high as £2.13 or 14. And if we get that, I will probably be rather pleased with myself, and I suppose shareholders would be even more pleased with that kind of result. Moving on to ECR Minerals, which had a decent update today. Did suggest that it's all about breaking that 0.2 to 0.3 range, and actually in terms of the detail, it's also important to break the 200-day moving average at 0.31. Above that, we're looking for up to 0.42, and the upper parallel of that rising trend channel from September as soon as the end of next month. I think the time has finally come. Hopefully it'll come over the next few weeks. Moving on to a stock which I covered twice yesterday, once in the weak and small caps and then on the charting basis as well. And it's good to see that the market has taken note of the bear trap gap reversal that we had last week. Beautiful strong candles there. We had the placing obviously at 12 pence, and the shares now up to the 15 pence level, looking for up to 20 pence, maybe as soon as the end of this month, which is the top of that broadening triangle from October. Obviously the company took in its 800 grand or so, 827 grand in fact, over the course of last week. So that suggests that it's ready to execute on its nefarious plans. Moving on to Empire Metals, and here we've got a rising trend channel at the top of the range. It looks like it's a range between 9 pence and 14 pence. If you're cautious, you wait for an end of day close above the 50-day line at 11 pence, looking for a retest of January resistance there. And you might also be waiting for the RSI to get back above neutral 50 versus 47 at the moment. Moving along to Karelian. Here we've broken the 50-day moving average for the first time since October at 2.25 pence. Above that, looking for 3.1 pence, hopefully as soon as the end of this month, which is the top of a broadening triangle from back in October. We've also got bullish divergence there with lower price lows for February, but a higher RSI trace in terms of that latest rebound. On to a stock which I interviewed a couple of weeks ago. I was very impressed by the latest results from the company, and we've broken out of that mid-move consolidation. 133, the top of that consolidation. Above that, looking for the top of that broadening triangle from back in February last year at £1.55, which hopefully will hit by the end of this month, given the way that we've had a second unfilled gap to the upside in just a month. Moving along to a stock which I haven't looked at for a long time, but I don't think anybody else looks at typically again either. Malvern. Here we've got a very strong trending stock. Don't normally get so many of these where the pullbacks are rather shallow, and we have a sideways consolidation. Rising trend channel there from March last year, top of the channel there, up to 34 pence. We're looking for that by the end of this month, while we remain above 25 pence and that 50-day moving average. On to Powerhouse Energy, which had a nice flourish earlier in the month. Looks like it's going to have take two on that. That's back. That idea is back, by the way. We've got that rising trend channel base from the end of October, and also, by the way, that the 50-day moving average is now rising quite sharply. That's around 0.34. Above that 50-day line, we're looking for up to 0.55 by the end of next month, maybe sooner than that, but let's be conservative given that we've got the 200-day line in the way there at 0.46. We haven't been above the 200-day line since back in, the end of 2021, so that would be quite a trend change if we can get through that 0.48 level in the case of Powerhouse. Moving on to the retail punter's favourite, which is, one of which is Premier African. Here we've broken that line of resistance there at 0.28. Didn't quite get up to the 0.4 that I was looking for, but obviously nobody's perfect. We went up to 0.38.5, but we've stayed above the trend line break level, 0.28 above that, looking for 0.4 again, hopefully by the end of this month. And obviously people looking at the fundamental picture there in terms of the RNS that came out today. Renalytix is next. We had the trendline break back in the early part of January, around 13 pence, but it's taken a month or so for the shares to gather up their momentum and deliver a bear trap gap reversal. As we know, that's one of our favorite signals, largely because it tends to work. In this case, above the 50-day line at 14 pence, we're looking for 25 pence as soon as the end of this month, or even sooner, given how strong those two candles look. And obviously in these markets, you don't get accidentally strong candles on anything. Moving on to Sondrel, which I covered yesterday as well. So it's another sort of slight lap of honor situation here. The Neuralink connection is something to behold, almost as exciting as the Tesla connection at DG Innovate, maybe even more exciting. In fact, initial target here is at 15 pence, which hopefully we'll get sometime later this week, and then obviously retesting the peak of last week at 22 pence. Best case would be up to 30 pence by the end of next month, while we remain above the recent consolidation around 9 pence. But the unfold gap to the upside started that rally, bear trap gap reversal, and as I said, we like those. The stock where the charting has worked absolutely perfectly has been Strategic Minerals, and here we had a bear trap gap reversal. We had that back in January, broke the consolidation there at 0.17, the initial target there 0.25. The second target, as is normally the case, 0.25, and then we go to 0.35 on that. Finishing off with Tekcapital, and here you can see that rather messy, given well, probably messier than it should be given the Microsoft read across, but after several bounces off that broken resistance line there from April, 9.5 pence, looking for another go at 14 pence, hopefully during the course of February. That's it from me today. More updates tomorrow.